everybody. Welcome to the market strategy session for the week of May 11th, 2015. I am Michael Saul, also known as Tiny, and I'm joined by Mr. Paul Schatz. I want to wish everyone a very happy Mother's Day. If you're a mom, then this day is for you. But if you have a mom or know a mom, or maybe your wife's a mom, or your daughter's a mom, or somebody else is a mom, then it's a special day for you as well and for them. Okay? Quick announcement before we get into the meat. According to Zero Hedge, we are in the most range-bound market in 105 years. This sets up for a massive opportunity for us because the market does not stay range-bound forever, or it hasn't in the past, and if past performance, while no guarantee of future results, if past performance is any indication, then we are set for a very nice move. Now, will it be higher or lower? Well, that's something that we have a strong opinion on, and that's higher on the short term at least. And I've been working this weekend to identify 7 stocks. I've narrowed the list down to about 50, but we're going to get it down to 7 stocks that are set up and ready to move higher if the market does break out higher. If the market doesn't break out and it breaks down, there will be no harm, no foul, because we're going to wait for confirmation. We're going to be narrowing these stocks down to under $50 a share and looking to make them all optionable, make sure they're optionable. They may not be, but we're trying. So this week we'll be holding a special webinar with information on how to get your hands on these stocks and participate in what could be a historical move. It will definitely be a move out of a historical condition, because we're, like I said, we're in the longest range in 105 years.
Is that historical or just historic?
Historical.
No, actually it's historic.
I don't care what you say. You're wrong. And,
when it comes to grammar, I'm royally wrong.
Right. So you're royally wrong when it comes to grammar? Is that what you said?
Yeah.
Okay. So stay tuned to be sure to whitelist our email, paulandsaul.com, because we don't know what day we're doing the webinar, but it's going to be this week, and it's going to be short notice. And even if I am saying historical and historic in the wrong way,
Paul's a jerk, right?
Right. we're still gonna narrow it down to 7 stocks that will take advantage of this historic condition. Okay, we don't know. Now, we don't know if the move is going to be historic, but we do know that the current condition is historic. Okay, and obviously, and this isn't us saying it, this is Zero Hedge if you read them, and they're judging it based on that the Dow hasn't hit a 30-day high or low in a certain amount of time. Whatever it is, it's a big, giant wind-up, and those usually lead to very big moves. I still think, my opinion, that the NASDAQ will hit a new all-time high before a serious pullback comes in. That's 10% away. The Qs are 10% away. The composite, obviously, is much, much, much closer. So I think we have at least 10% more to go on the upside, but for the NASDAQ 100. But, opinions vary, and don't forget, it is May when you're supposed to sell and go away. But we'll talk more about that this week. Let's get into economic reports. Tomorrow, Eurogroup meetings all day. Then you have labor market conditions, but it's rated a yellow, so it sounds more important than it is. Tuesday, the JOLTS job opening, and Williams speaks at 12:45. Then you got the Fed budget balance at 2 o'clock. Again, it's a yellow though. You got German preliminary GDP, but that's at 2 in the morning on Wednesday. But then you got core retail sales and retail sales. Pre-market again, business inventories during the market, but it's a brown. Then Thursday pre-market, PPI unemployment claims. Those are the weekly unemployment claims. And then on Friday, you have a red during the day, which is preliminary University of Michigan consumer sentiment at 10 a.m. Now, why do I really care more about what's going on in the day than I do pre-market? Is because there's more of a chance to get a shuffle type of move if it happens during the day. If they're being reported at 8:30, by the time the bell rings at 9:30, it's usually been digested by then. I mean, it's usually digested in just a few minutes. But if they're released at 10 o'clock and you're in a position and you're a day trade, obviously if you're a swing trader, I guess those little jiggles aren't going to matter. But if you're in a day trade, then you got to, worry about those times, okay? I really don't want to go over the earnings calendar, but I will anyway. Don't ask me why. It's really nothing important, in my opinion, coming up. And again, I mean, even the important stocks aren't moving the market like they should. So I don't know what to, really say. We're still thick in earnings season. There's still a lot of stocks, which means you have to be really on top of these if you're in positions and you're looking to exit them before earnings. I mean, look, if you want to hold it over earnings, that's fine. That's on you. But just be aware of that. I know some of you like to play for a little lift into the earnings announcement. And then, of course, you have to decide if you want to hold it over or not. And on a historic testing that Paul and I have done over the years, and we have, I guess it's more historic observation, we really have not been able to find an edge with holding over an earnings report. Again, that's for day trades. If you're swing trading or you're position trading and you've owned it for a while, it's a different story. Okay, that's your choice. You're holding it for a different time frame. I'm talking about for those of yous, if you want to talk grammar, Paul, those of yous who decide they want to make a quick trade for an earnings run or something like that. Just be aware of what's coming up, all right? I'm going to hand it over to Paul. I'm coming back, and I'm going to take all your questions on stocks, commodities, currencies, etc. And this week, just a quick reminder, if you leave, because a lot of you folks leave after Paul's done, this week, watch for an announcement for a special webinar to talk about 7 stocks that are set up and ready to move higher if the market breaks out. And we don't believe that there's an if the market breaks out. It's a question more of if it breaks out higher, because just because it's in a range and just because it's near all-time highs doesn't mean it's going to go higher. So it's more of 7 stocks that are ready to move explosively higher if the market breaks out to the upside. All right, that's it. I will be back. I'm not going anywhere, so I'll be here. Paul, if you need to ask me any questions, you got to give me 10 seconds to turn the mic back on to answer you. That's it.
Thanks, Mike. Okay, here we go. Good Sunday evening, everybody. Hope you all had a good week. I returned from, where was I this week? Oh, I was in California. I returned on Thursday. Very good trip. Brought my wife with me, who had a week-long vacation with absolutely no responsibilities other than to wake up, shop, eat, and drink. So that's not bad for her for the week. I, on the other hand, actually worked. I worked 12 hours, 14 hours a day. But it was a good trip. I packed 3 trips into one. So fingers crossed, God willing, I don't have to go back to California the rest of the year, which would be nice.
And don't forget, she also has to.
So
don't forget, are you still there? She's still. One of her jobs is still to fend off your advances.
Yeah, not this trip, Chief.
I don't know what that means, but okay.
So it was a very nice trip. She hung out with some of my industry buddies, and she met a bunch of their wives, and I won a golf tournament last Sunday, which I think I mentioned. Oh, I think we did this on Saturday. So I won a golf tournament last Sunday afternoon, which is good, and that's that. So it was an interesting week in the market, kind of, sort of. As I've written about in my blog, it's got to be at least 6 weeks. We remain in the trading range. And just when it seems like we're going to break down, the bulls come in and rescue the day. Just when it seems like we're going to break out, the bears come in and reject the bulls. So we've gone sideways for a long time. We are certainly wound up and ready for a move. I've said every week for a while that doesn't seem like we're at that point yet, but I do think we're getting closer. Some of the longer-term sentiment indicators, like the Commitments of Traders report, is beginning to show the little guy getting short and the smart guy getting long. It's anything but foolproof, and when it's wrong, it's really wrong. But we're getting to that point where a lot of studies suggest that the breakout, which I've said all along, is going to be the upside. One thing you got to remember, here's the Dow. When you have this kind of trading range, this is 3 months or 6 months if you go out longer, oftentimes the market will break down and then break out, or will break out and then break down. So that first move is always suspect. Just keep that in the back of your minds now. Friday we had the jobs number, which, if you recall, my thesis was and has been that Q2 economically is going to be a it's going to be a whole lot better than Q1. And that started with the jobs number on Friday. So I'm not an economist, and I couldn't tell you how to predict a number other than I thought it was going to be better than people expected, and it was. Most of the upside work was done at the gap. Stocks ran a little bit during the day, but the real fun was done, 8:30 to 8:45, 8:50, and that was really it for the day. Now, in the very short term, the market tends to have a little hangover from the jobs report when it gaps up and runs. So I wouldn't be surprised if we continue maybe a little higher Monday morning and then begin a pullback, or maybe we have a quiet rally on Monday to new highs, then we pull back again. That would not shock me. In fact, I'd probably lean that way to begin the week. So here's the Dow. It's pretty clear that here's the upper end of the range. There's the lower end of the range. That's where we are. Oh, could we fall down below the lower end of the range? Yeah, we could. If we break out here, I don't know. I still don't think we have the firepower yet. I could be wrong. I don't feel it yet. But maybe the scenario is we have one more rally, and then we pull back and close the gap and then go. That one would be a little more plausible, but we'll see what happens. S&P, kind of sort of the same thing, right? Let's use this high. So there's the S&P, kind of sort of the same thing. Maybe we run tomorrow up, maybe get one more day of rally or a half a day rally, and then we pull back, maybe close the gap and then go. Mid caps, which were the leaders, they're not terrible. I mean, hard to argue with this kind of action. Trading range in the downside, not so visible. So we'll leave it at that. But they still look fine, mid caps. And if you notice on the bottom, I'm pointing with my finger with the mouse, stochastics oversold and opening up. S&P a little bit higher but opening up. Russell 2000 small caps oversold and opening up. So Here, the Russell is very close to the lower end of the trading range. But nowhere near where we saw the S&P and the Dow and kind of the mid-cap. So the Russell's been lagging. And the Qs, which is technology, lower end of the trading range, pretty visible. There is no upper end of the trading range. Still think we're going much higher. Intermediate term, I think we're going to break out to the upside. Short term, due for a little weakness. Europe, which I've liked all year, as you know, had a beautiful day on Friday. I mean, in the face of all this negative news, and I've said it all year, we've had a pretty good rally. We're up, what, 18%? It's been a nice run in Europe out of nowhere. Everyone keeps poo-pooing the rally, but price doesn't lie. Beautiful pullback. We talked about this pullback last week, that it looked very, very constructive. It didn't look impulsive. So take it for what it's worth. Europe still looks pretty good. Emerging markets. Last week was not a great week because this looks like a sloppy topping pattern, but we'll see what happens. The bulls are going to try to rescue themselves and break this pattern right here. If you believe in head and shoulders on indices, shoulder, head, shoulder, the EM's got to get above last week's high. I have done nothing new. I still own China. To me, it still looks fine. I still own the Philippines. Looks fine, but I'm getting a little impatient. And I got my eyes on Hong Kong, which looks really nice. So here's a beautiful impulsive move, boom, boom, from 21-ish, 24.5, and it's been consolidating for a month. I fully expect the next move here to be to the upside. Tiny may say to you that, I won't speak for him, but perhaps this is what he would look at as a flag. Here's the pole. Here's the flag. 21 to 24. 24. We'll round it. Call this target to maybe $27. So Hong Kong's on my buy list. Before somebody asks, I have no new opinions on Russia. Not really interested because you've got tremendous overhead resistance and you got support. I'll let it shake out. Brazil, I did a little reading on this weekend. It's getting more and more constructive, Brazil. Not that I want to buy it right away for a long-term trade, but this action is good, and it's looking a little better intermediate long-term. Let me pause for uno momento and see if we have any questions. Scott, no South Coast Plaza. We were right across the street from Fashion Island at the Newport Beach Marriott. Oh, my wife was very, very happy. Let's see. Johanna, would the Dow and the S&P qualify as a flat top? Oh, I like that. There you go. Johanna's learning. Yes, absolutely. Here's the Dow. So I love to buy flat top breakouts. Usually, this is clearly a flat top. And the S&P, kind of, sort of, this maybe a little even better of a flat top. So I do like flat tops. You're right. Very good pickup, Johanna. Do you think the Fed will raise rates? Well, Brian, they're going to raise rates. I don't want them to do it now. I don't think it's time, but I don't think the number was that strong on Friday to put June on the table. And I would almost argue that they need to start floating the trial balloon of September. I think if you get another couple of numbers, first of all, I think if this Q2, if the GDP number begins to regain footing, which I think it will, And I think you need at least 2 more non-farm payroll numbers in the mid to upper 200,000s to have the Fed raise rates. And in fact, Brian, you just gave me a good idea for a blog, which I'm going to do tonight. I'm just making my own little notes. Okay. Let's see. So I think the Fed's going to raise rates down the road. I think it's a bad idea. Scott Vachon's great. They're some of the most beautiful people that I've seen in a long time. It's a very soothing place on the eyes. Great restaurants, fun to walk around, good junk food, good bars, a lot of fun. Okay, and we go on. So the indices all look pretty good. Let's go to my 3 key sectors. The banks. You know, I said this for a while. The banks have been quietly building up some coil, some leadership potential, and I still think they are. I mean, banks do not look bad. This, to me, looks like this has been a nice consolidation, and they are going to blow off, I don't know, 10, 20% in the next 2 quarters. So banks, I'm a buyer of the banks. Trannies coming back from the dead a little bit. This was the day they sucked all the bears in and stopped them out. The trannies, every time they pull back now, there seems to be an organic buyer. Friday was not good action, but the trannies, it looks like they're building for a move higher. And finally, the semis, kind of the same. I mean, I think they're neutral with an upward bias. So I would rate the semis and the trannies neutral with an upward bias, and I'd rate the banks positive. Not bad. Doesn't look like the bull market's ending right now. Although funny, last week, I want to say it was here on this last day, I heard some chatter that we just saw the bull market peak. If I had $1 for every time during this bull market somebody just said the bull market peaked, I'd have a lot of dollars because they're always wrong. Let's go to the rest of the sectors. Software still looks pretty good. Hard to argue with software. Definitely a market leader. Definitely one to own. No, I don't have any concerns with software. Telecom got hit with the ugly stick last week. I still like it for the year. It's one of my picks of the year, as you already know. Keep waiting for a really constructive pattern. Start pounding the table like we did down here and down here, but not yet. But I do like it for the whole year. Telecom, nothing actionable right now. Diversified financials coming back a little bit. It looks kind of like the banks. I'm a buyer. I like them. I think the prospect of higher interest rates fundamentally is going to create a tailwind for all these banks and alternative financial institutions. So the net margin interest is going to be pretty good, I think. The consumer, which I continue to say is the leader in the market, you cannot tell me this looks bad. Except for this one bearish engulfing pattern. This looks pretty good. I like this. We're just consolidating and moving out. The longer we go sideways, I believe, the higher the likelihood is we explode to the upside. Retail, which is a subset of the consumer, not as strong, but certainly okay. I like XLY better than retail, but retail looks okay. And the home builders, which are one of my groups of the year, look good to me. Nice, constructive pullback. You had bullish engulfing, doji retest. We're trying to move out now. I like XHB. Industrials, I've had no pair of twos for the whole year. 6 months, I still don't love them yet. They're going to be a leader. I just don't think it's yet. You want to plan, be my guest, but I'm not excited about them here. Materials, I have not liked on a relative basis. I like the other sectors better, but you can't argue with their performance on Thursday and Friday. They look fine. I just think there's better money to be made elsewhere. Energy, here's XLE, which, as you know, we've been bullish on for a long time. I'm going to go right to OIH. So I did some selling. I've owned, as you guys know, I've been long this all year. Now I'm happy about it. You know, early down here when you guys were making fun of me, I wasn't so happy about it. I did sell half my position on Wednesday up here. So I've got half my position left. What's my plan? Not sure. I was really wanting to sell half into close of the gap, but I've got half my position left here. I'm going to give it some room to try to break out right now, but I did sell half my position. And what you'll notice is you got a little divergence here. You get the bears sticking their neck out right here, a little gap left, so we'll see what happens this week. Some of the defensive issues, IYR, still not trading well, and that's on the prospect of the Fed raising rates. So I don't love this, although you can certainly make the case that you have a little divergence here, but nothing to write home about for me yet. Utilities pretty much still stink. I don't like them yet. Also, one of my picks for the year that's not panning out. So nothing I want to get excited about. XLP, another one that does nothing for me yet. Pair of twos. Did I leave anything? Oh, yeah. Healthcare, my two big positions. Healthcare, we still own. Has gone sideways. Yes, I'm getting frustrated, but it's hanging in. Let's get rid of this line. It's holding the lower end of the trading range, and if we can get going on the upside, I think we can get a full leg higher out of healthcare. Biotech, I remain long as well. Just poked below the end of the lower end of the range a couple weeks ago. I hate this kind of action where it takes out the bottom of the range and it's not a convincing day. So that kind of bothers me. It makes this move suspect for me. But nonetheless, I am still long it in pretty good size. So my sector, I own healthcare, I own biotech, and I own oil service, as I've owned all year. So it's May, and I haven't done much. That's really unusual for me. But as you've seen, there hasn't been much to do. And I'll just pull up GDX while I'm thinking about it, gold and silver miners. As I'm sure you can guess, I bought some on Thursday into this pullback, 50-day moving average, 3-day pullback. I'm not going to give a lot of room, though. You close below Thursday's low, I am out. You get moving to test 200-day, I'm probably out. So a very short-term quick trade for the gold and silver miners. Now let's pause and take some questions. So there's no questions. Okay. Only a dean asked me if I visited PIMCO in Newport. It's funny, when we were there, I did an interview, which I will definitely share when it gets published, with Orange County Talk Radio, and I didn't realize, but all I think it was, what did they say, the 3 biggest active bond managers in the world? I forgot what were all in, so Southern California. You had PIMCO, you had Double Line, you had Guggenheim, and somebody else. There's 4 of them, all in Southern California. So it's the bond capital of the world. Joanna, I will get to copper shortly. You want solar? I think you guys like tan. I gotta start following it. There's a couple that I don't look at that much. This is one of them. I mean, it still looks fine. It had a huge run, pulling back. Nothing really exciting me down here. So a couple of TAN is one that I should look at. FDL, the internet one, I used to trade. So that's a good one. Oh, not FDL. Sorry. What's my? Oh my God, I'm blanking. What's the internet? Let's see. So social media is SOCL. What's the? Oh, FDN. FDN. That's another one that I look at sometimes. The internet ETF. That still looks fine. In fact, it looks better than fine. Yeah, Bill. Hack is really specialized. Hack is just the internet security stocks. So talk about these stocks on Fox. Oh, Fox Business. So I'll be on. For those of you who care, I'll be on Fox Business on Charles Payne's show, 6 o'clock to 7 o'clock on Tuesday night. 6 to 7 on Tuesday night. Me and the Payne show. And Jay asked about the large outflows from high yield funds in the middle of the week. What do I think about it? It concerns me in high yield because high yield is not traded well, and high yield is a canary in the coal mine for the overall market. So yeah, it definitely concerns me. Speaking of that, and thanks for the nudge, Jay, I got a buddy who used to run a couple of major high yield desks on the street. Now he runs a credit hedge fund, so I'm going to call him tomorrow and find out his take. I'm going to guess he says it's all in the energy space, but I'm going to find out. I'll report back next week. All right, let's go on. Here's the NYSE AD line. Look at it every week. There's not a soul alive who could argue that this chart is bullish. Okay, there's nothing wrong here. We just made an all-time high a couple of weeks ago. Bull markets do not end with this kind of structure. So that's so much for that. Here's high yield. JNK I bought back last week. Embarrassingly, I can't remember when. Thursday or Friday. Maybe it was Friday. I don't know. In any case, I bought back high yield last week. This chart still looks pretty good. So JNK is the most liquid of the high yield bonds. It looks fine to me. Stochastics oversold, well, mildly and returning up. Looks fine to me, JNK. The mutual funds, which I've owned for a while, and I'm not exactly thrilled about it. This one looks better than the ones I own, for full disclosure. But you're right near new high in the PIMCO high yield fund. This still looks pretty good. So high yield, I think maybe it's going to boil down to the haves and the have-nots. I haven't done enough work lately on high yield to offer that opinion, but that's what it's looking like on the surface. Okay. Let's go to let's go to TLT, which I did sell last week. Although, to my credit, I did not sell it at the low point. I sold it around 122.50, which makes it about right here. So I'm out of TLT once again. This time I got stopped out with a pretty good loss. I think we bought it in here. Actually, maybe not, because I forgot we got dividends. It doesn't matter. In any case, I'm out of TLT. It looks like it wants to bounce, but I don't think it's bouncing with anything of significance. Here's a 10-year yield, which I have said all year. I'm at the 150 to 230 area. It looks like right now, even if yields come down a little bit, they should head towards 230, 235 this quarter. And gold. In gold and metal, as you know, intermediate term, I don't like it. I think it's going towards 1,000. I don't like it now either. It's fine. Actually, it's not fine. It's mediocre at best. The stocks look a little better in the short term, but there's nothing redeeming about gold right now. And silver, same thing. It's okay. Nothing great. I'd rather own the stocks right now. In copper, copper clearly looks good. So you want to play something again. I love copper. Had a beautiful pullback from this wild 2-day reversal. It's been a month pulling back, very orderly. Had 2 bottoming patterns in here. You've got a very impulsive move. You're consolidating just above the 200-day moving average, and the next move should be higher in copper. Natty gas, also we talked about it last week. The smart money is so locked and loaded in the long side of natty gas, and we finally got a move to the upside in natty gas, so you can count me as a bull. I think at a minimum we're going to close this gap. So I think we got natty gas has some upside to it. Looks pretty good. Crude oil, which I remain long. I didn't sell any of my crude oil position. I won't be so patient if we begin to roll over the downside. We should bounce. We should try to test as high. But if we can't, I will probably sell half my crude oil position. I also own RBOB, unleaded gas. So my theory is the same thing. My plan was to sell into a move to close the gap. However, maybe we don't close the gap. Maybe I'm wrong. Maybe the rally is ending. We'll see. But I came back from the dead having, on paper, lost a lot of money. I don't want to give a lot back here. And the dollar, which I remain uber bullish long term. Short term, we're pulling back farther than I thought we would have, but it's not going to change my thinking. This is a normal pullback. The dollar to me long term, even intermediate term, still looks good. Short term is a toss up on the dollar. The euro, nothing new. Would I want to play it to the long side? No, I want a shorter rally. Could it go a little higher? Yes, but I still want a shorter rally. I have no interest in playing the euro to the long side. Yen, same thing. I am bearish on the yen. We got a long way to go on the downside. Short every rally. If you want to play a little rally, you got to buy at the lower end of the range. I wouldn't buy it in the middle, upper end of the range, but I think the yen still goes much, much lower. So let me just take a moment and look at some questions. Gas prices in California are above $4 again, so it won't just have a negative effect on the market and the economy. Gavin, the answer is empirically no. Gas prices are in a range. Markets love commodities in a range. So until gas gets above 5, I think we're in pretty good shape. So I don't think it impacts the economy negatively right now. Good for consumer, lower prices, bad for the companies. When you go sideways, everybody adjusts and everybody does well. Is there a floating rate ETF out there? And what do you think about floating rate as investments? Did I tick on my leg? No. Johanna, there's many floating rate ETFs. I don't have the list here. It's in my office. I think float is one of them. Some are short term, some are long term. You got to be, my worry about floating rates is that they have not been through the ETFs, a market dislocation. So I think you got to be really careful with floating rates. Some are short term, some are long term. They're not great credit quality. They rely on liquidity. So just be careful with floating rates, also known as bank loans. But you can go online and search the ETFs. I did a ton of work on it a couple of years ago, and I decided that it wasn't something I wanted to play with. UNG, Young, I just did natty gas, NG, which looks good to me. I'd buy it. I think it's going much higher. JN, wait, JN, you got me confused. What's my high-low chart? I'm not sure about that. Ouch. Where's my leg? So while you're typing, let me look at the loonie. Here's the Canadian dollar, the loonie. It kind of looks like the euro. I don't love it for more than a trade. I think you could do probably short rallies is all I would really want to do in the loonie. So nothing there for me. Other questions? So JN, while you're typing, let me just forge ahead, and then I'll come back to anything you want to come back to. Okay. Let's see, we cover gold, silver, copper, all the energies, ED line. Let's go into some commodities because smart money is really locked and loaded long. So last week I said I would play wheat to the long side. Count me as a wheat bull. You got another divergence in wheat. You get a couple reversals. I think wheat's going higher. So I like wheat. Smart money is really long wheat, and their dummies are short wheat. It did not work with the euro and the dollar, FYI, but soybeans still consolidating. Although I definitely would rather be long than short. But there's no commitment yet, no conviction from either side. Corn I do like. Almost record longs in corn. You have a nice hammer from last week. I think you got to give the bulls the benefit of the doubt and attack corn this week. Oh, you know what? So here's DBA. If you want to play an ETF instead, here's the Ag ETF. This looks pretty good. It looks like crude a couple months ago. You know, a couple of pokes down towards 22. We're trying to move out to the upside. I think it's going much higher. You get a good run coming in the ags. Now we'll do the ags and nobody trades. Here is sugar. Sugar looks good to me also. I like this day. I like this day. And Friday was a monster. To me, it looks like we're breaking out. Probably get a run towards 14 in sugar, so it looks good to me. Cotton also looks fine to me. We reversed one day. We're very constructively digesting, and it looks like cotton's ready to go to the upside again, take out 68 on our way to 70. So cotton looks good to me. Here's cocoa. Cocoa I don't get excited about yet. Still nothing in the short term. It looks like it wants to break out above the 200-day and above here, but nothing is constructive yet on cocoa. And coffee, not yet. We're getting closer. Not yet. We're getting closer. So the ags and the softs are looking much better. Oh, Jan asked about my AD line. So let me see, what was your comment, Jan? And let's see. So your high-low chart shows, my 80-line chart shows you broke the long-term trend line, then recovered. Don't get so hung up on a trend line and then it broke it. Now it's down here. Just as easily, this thing goes to new highs, and then you have a new trend line. So don't get hung up on the trend line or the shape of this pattern on the AD line. Is my take. You can disagree if you like to, no worries. But I think AD line is going back to all-time highs very soon. Other questions, comments, concerns? The market looks, to me, pretty good. I'm just concerned about the real short term. Intermediate term, long term, we're going much higher, I think, anyway. turned the AC on in my house today, so that was really of note and important. And I planted some new grass where the plow guy took out on the sides of my driveway, so that was kind of exciting, which I always enjoy doing because I have my own ridiculously anal method to planting my grass. Or I till the ground up, and I water it, and I put my own dirt down, then the seed, and then some mainly mulch, which is salted and boiled hay. So that was good. And that's about it. Last call for questions. Going once, going twice. You guys are a quiet bunch tonight. Okay. So I'll be on Fox Business Tuesday night, 6 to 7, unless they cancel me, and then I'll be pissed off. Scott, where's support on IBB? Let me look. Yeah, probably around the 330 area. Remember, contrary to what most of the knuckleheads say, support is not a data point. Support is kind of like a pillow top mattress. You kind of dive into it. So that's my opinion, support an IBB. When you say the bigs are lined up long and wheat, I am referring to the commercials, Scott. The commercials are locked and loaded long in wheat, in corn, natty gas, S&P 500, NASDAQ, and then the dummies would be the unmentioned or the non-reportables. I used to call them the unmentionables. So they're not always right, but they're usually right. That's it for me. Have a great week, everyone. I'm going to take a shower because I smell. Good night. Tiny, you're up. Hello. Earth Tiny.
Can everybody hear you?
I'm here.
Hi!
Okay.
Oh, we were.
Okay.
I'm just eating.
Katie's trying to annoy.
I'm eating some
All right.
blanched asparagus.
All right. Well, I'm going to take a shower.
About time.
Yep. That's what my family said. Hey, listen, I did a really good job on Mother's Day. Terry got nice gifts this morning, and then I cooked, and I planted grass, and I took my daughter for her pitching lesson.
Not
So,
the best picture in the world.
all right, go to bed. All right, later, bro.
All right. All right, folks. Give me your stocks, and I will go over them. I'll be right back. I'm just going to go grab 2 more things of asparagus. back. Okie dokie, let's get started. Etna, by the way, a nice looking pattern. Nice little rising channel here if you're interested. Confirmation. Okay, so let's get this out of the way. Nandita asks, could you please go over what you mean when you say wait for confirmation? What does that mean exactly? Well, if I'm a technical analyst, so I look for chart patterns, and what you want to do is, just because something is in a chart pattern, like to me, if you were to ask most people who use charts what Etna looks like, they would tell you it's in a bullish pattern right here, okay? However, it's in a consolidation. So even though we're above the moving averages, it's in a strong trend, momentum says further upside, you still have to wait for it to go higher. In other words, if it goes higher, it is confirming the pattern. And that's what you have to do. You have to wait for confirmation. So if you're looking at a breakout, you have to wait till it actually breaks out. Now, does that mean that you can't get in here? No, you could get in here if you want to, but you are taking a greater risk than if you wait for it to break out. Now, it can still fail after it breaks out. That's fine, okay? But you have a better chance of waiting for of it working after you wait for confirmation than if you just jump in. All right, does that make sense? Now, Leonore, I have no idea what you're saying. I don't know what this word is that you wrote in here. It's a 6-letter word, so I don't think it's a stock symbol, so I don't know what I can't help you with that. I mean, maybe you're calling me a name, maybe, I don't know, and that's fine, but I don't know what name you use, what name even name you're calling me. Oh, okay, there it is. All right, so, dang. Yeah, I mean, it could be bottoming out here, but you got to get over the 200-day moving average before I get bullish again. Palo Alto looks nice. I mean, it's in a bull flag here. 50-day moving average is holding. You know, this is definitely on my list of potential of those 7 stocks I was talking about. You know, this is in a nice-looking bull flag. It's in a very strong uptrend, but it's $151, and you know, I'm looking for stocks under $50. Yes, it's absolutely dependent on the pattern you're observing. Absolutely, as far as confirmation is concerned. AXAS, yeah, I mean, this did okay for us out of its pattern here, but now it's failing back. I mean, if it gives this level up, you could probably use $3. If it gives that up, then you're probably looking for a retest of the lows. Not really doing so great there. 3D printing. So DDD, they look weak to me. These stocks look weak to me. These stocks look like the bloom has come off the rose on these. SNDK could be a high or low in here, but for me, you know, and my trend lines, it's a consolidation. So you wait if it breaks out, or you wait to see if it goes lower. All right, data, DATA. Yeah, gotta wait for a pause now, but it looks nice. Data looks nice. CCLP looks way too messy to me, so I have no idea what to do with this stock, and it needs a few sessions at the least. Zillow doesn't look too hot. Looks lower to me, but maybe this is a high or low. I mean, I know I'm giving a lot of maybe, but but I mean, it's just there's nothing really shining, you know, sticking out to me saying, hey, you know, this looks great. I mean, maybe if it breaks the trend line, maybe, but I mean, you still got the 50 and the 200-day. AAWW is a stock that I did a lot of work on today. Love this stock. I love the way that it had this really nice run up. So I don't like to chase momentum, but I would love a bull flag here. This is very stretched. You're 11% above, or whatever it is, 10% above the 10-day moving average here. So, I mean, that alone tells you that this thing is overbought, but what a nice shot of momentum here. Really like this one, but wait for a pause. CRR, yeah, love this little baby pattern here. Love, love, love it. All right, so if it breaks out, watch that 200-day moving average, though. That is a pretty hard downward sloping moving average. So like for here, right, we're talking about confirmation. So you would wait for it to break. Now, I'm not saying you have to wait for it to close to buy it. You could buy it right on the breakout, but it better close outside that breakout for the session. If it doesn't, then you have no confirmation, and you have to consider just getting out and taking a small nick. Never be afraid to take a position out. You could always get back in. FEYE. Yeah, this is sloppy. I mean, it's getting a little bit better as far as a consolidation here, but it's a little sloppy. AT&T, too sloppy for me to make a beat on. PG looks lower. I mean, it's had the push down. Now it's back. It turned at the 20 EMA, so we want to watch to see what that does. FTK. Yeah, looks low. I mean, small hammer on Friday. Maybe it gets a little lift, but it definitely has momentum to the downside. PM, yeah, it looks like it could get higher, but you got to get above 86, and you really have to stick above that. I, okay, there's no symbol I, so I guess that was FFI. BFU, there's no symbol BTFU. That's because you said BTU, so that's the reason there's no BFU. All right, so BTU, sorry about that, I misread it. BTU looks lower. This thing is in a pretty strong downtrend. There's no reason for us to think that it's going to just stop, right? Trend is more likely to continue than reverse. AKS looks like it wants to move higher, see if it can get to the 200-day moving average. CLFD, I think you want, Salvador. Let me see. Is this what we want, CLFD? Yeah, I mean, it's holding on to the 200-day moving average here. So, you know, I like setups like this because you know when you're wrong right away. For instance, if you buy this breakout, you know to put your stop right under here. If you short this breakdown, you know you put your stop right above here. That's CFLD. Okay, AKS, we just looked at. I don't know. Yeah. Having a short-term freaking memory loss here. Apple, sorry about that. Apple, yeah, you know, it looked good for a while with this break, but now it's just back in this muckety muck, just mucking around in here. So it's going to have to make its move out of here before I'm getting excited about it, if that makes sense. It's a muckety muck. Right? That's a technical pattern. PPT is way too sideways and sloppy for me to make a call on it. CU looks okay. I like this push up here. I think we talked about this because I have these drawn in already. So I like this here. I like this pullback right here. See if it gets confirmation and breaks and continues to move higher. CYS, sloppy, more sloppy than anything. FXI, yeah, I don't know. DIG, yeah, could be bottoming out. Could be. You got, you know, it's too early to tell on these. Alibaba, way too sloppy for me. I'm not interested in this one at all. If you're looking at the short term, then maybe you could use this level here to watch to see if it breaks, but then you got the gap fill here. I mean, this thing is, it's sloppy. It's very, very sloppy. Yeah, I mean, it's in a downtrend, but right here you have a triangle. So, again, you got to wait. You know, can it break? Well, it's not going to break from there because that's not where we are. But can we break out here or can we go back down here? XLI, yep, sideways. Google, I mean, I can't, I don't have an opinion on this. It's just such a wide, sloppy range. It's probably going to, you know, tip its hand eventually, but it may need to narrow down before that. GoPro could be coming around here. You got this pullback here that it's starting to come out of. See if it moves from there. Tap. Yeah, I mean, this is just, look at this. This is just one big sideways consolidation going on 9 months or whatever it is now. I have no idea. GMCR. Yeah, starting to come up here. But it had the big gap down, so you have to respect that this gap could possibly be resistance. You have to see if it starts stalling out up here. Starbucks. Yeah, it looks like a bull flag to me. I mean, it looks higher to me. Dow Chemical. Yeah, it looks okay. Looks higher. CR is an interesting one. Watch the 50-day, because if the 50-day holds, this could get a turn back down. But if it can break, then it could try to go up to the highs. AAL. Whoops. Just sideways. More slop even than anything. And Guild. I mean, every week we talk about Guild, and it's I mean, it's creeping up a little bit, but it's really not in the mood to start moving directionally yet. Could just keep drawing lines all over it, you know. HLF. Yeah, looks okay. I mean, I want to see it really get above 50, but you got a little bit of a pattern here you could watch, but you know, it's got to get above 50, and then it's got to get above that level here. Okay, and then Loco. That boy is Loco. So Apollo Holdings is an interesting one. Yeah, a little channel here. All right, everybody. Thanks for coming. Keep your eyes and ears open, and watch your email, because we're going to have a special webinar this week. And we'll see you there. Talk about 7 stocks. We're going to talk about how you can get your hands on 7 stocks that we feel have some nice upside potential. All right. Adios, amigo and amigas. And I'll get the replay out soon.